Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Hey, welcome to Financial Issues, folks. It's great to be here with you this hour. We're live this morning, Monday, December 9th, second Sunday in Advent of 2024. I'm Seth Sam. Grateful to be here with you all today. I do hope that you are having a wonderful celebration of the Christmas season. We are here at the ministry as well. So excited to celebrate Christmas here with you all today. Thanks for joining us, folks. Whether you're watching on television, watching on social media, listening on the radio, we appreciate each and every one of you. If you're listening and watching on the app as well, thank you. Good to be here with you all today. On today's show, we'll get the latest market updates, get some economic headlines. Our topic of the day is a good one here. It's tips for building a good portfolio, and I think you'll enjoy it. It's great wisdom from Dan Celia as well as Shana. Shana will be live later on in the week, of course, by the way, so you're going to want to stay tuned for that. Also, Sam Case is going to be joining me later on to do a little BRI examination. I'm excited for that. It's called the BRI exam with Sam. So we like to
I like that.
Yeah,
I'm joining right now.
I actually just came up with that. So that's pretty, it's fun stuff. So Sam will join.
Dr. Seuss.
Thank you very much. Yes. So it's going to be a good show today, folks. And I'm excited that you've joined us. Our phone lines are open, by the way, if you do want to call in at 610-363-1110. Timothy Plan is the pioneer of biblically responsible investing and one of our sponsors of the ministry here. Today's show brought to you in part by Timothy Plan. I love the Timothy Plan. I love Art Alley and the team over there. It's an honor to stand shoulder to shoulder with them. Check them out at timothyplan.com if you're interested. We also offer a Timothy model here at the ministry. If you're looking to invest, but you need a little more help, if you're kind of less adventurous and you just want a little more guidance, the Timothy Plan model for your age range is probably the way to go for you. So it's all Timothy Plan investments, mutual funds, ETFs, different things like that. You can be completely confident they are biblically responsible, and they always will be. So we offer that model here at the ministry. It's a great model for you if you want to check it out. timothyplan.com. Folks, the scriptures tell us, and we talked about this a little bit on Friday, of the importance of walking as children of the light. Jesus is the light of the world. Indeed, that light broke into this world at Christmas, that very first Christmas day. And Paul talks about this in Ephesians 5:8. He says, "For at one time you were darkness, but now you are light in the Lord. Walk as children of light." So in this verse, we're reminded of what we once were. We were once darkness. We've been miraculously turned into now, by the power of the Holy Spirit, light, a reflective light from the light of Christ. And now we're also reminded, of course, what we must do as a result of this. This is the gospel right here. We were once sinners. We've been transformed by the power of God, and now we must live in holiness as a result of that transformation. You know, being governed by darkness means you're loving wickedness, you're not loving goodness. If you remember, there's part of the danger of darkness is that it conceals what is dangerous, actually. It conceals what is harmful. That's part of why it's much easier to commit evil actions when it's dark, because you have some extra concealment from the darkness itself. Turning on the light exposes what is in the dark, and really that's the best thing that can happen. Is that when you have dark deeds, the light turns on and that becomes exposed so that those dark deeds can then be addressed. We've been graciously plucked from darkness, folks. There's no doubt about it. We've been brought into the light of Christ, and so we must walk in the light. And walking in the light is just simply shorthand for living according to the Word of God. It's living in obedience to God's word. It's living as a result of the great salvation we've been shown and how we've been saved. So let's do this in everything, especially in our context with our money as well, as we seek to invest in companies that are not partaking in this darkness, and we seek to deploy our resources to ministries and organizations that are walking in the light. I would hope that you would do that today. By the way, if you're looking for some year-end options for your giving, of course, Financial Issues is a great place to do that. We would appreciate that so much, absolutely. Of course, I would want to be the last person to tell you exactly where you should give your money. I do hope you're tithing to your church first and foremost, and if that's all you can do, praise God, that's all you should do. But of course, Financial Issues is a place to go. You can also donate to Preborn. I believe there's a match going on right now at Preborn. It's not affiliated with a Financial Issues match, but there is a year-end match for Preborn. If you love Preborn as we do, great place to go. And of course, our new sponsor, Crossroads Kids Club, is a great place as well. So check out those ministries on financialissues.org. So let's turn to the markets here, folks. On Friday, the markets were moderately pleased overall. They're moderately pleased with Friday's somewhat positive jobs numbers, and so they were relatively positive out of the gate once again. By midday, the indices doing pretty well. The tech-heavy NASDAQ was leading the way. By late afternoon, much the same story. By Friday's closing bell, the Dow Jones was the lone loser. It was down about 0.25%. The S&P 500 mirrored it in the positive, up about 0.25%. The NASDAQ was the big winner of the day, almost a full percentage point in the positive territory. For the week, new record highs once again for the S&P 500 and the NASDAQ, while the Dow Jones was the lone loser. The Dow Jones finished the week about 0.6% negative. The S&P 500 was a full percentage point positive for the week, and the NASDAQ, the winner, up over 3 full percentage points positive as we come near to the end of the calendar year. Right now, as we open the week, or get set to open the week, that is, in about 20 minutes, the markets are pretty muted right now. The Dow is actually the lone positive pre-market trader right now. The S&P 500 is right around the flat line. The NASDAQ pulled down a little bit because of NVIDIA, which we might talk about in a moment if we have time. But before we get to that, I want to get to some economic news from the weekend with my friend Sam Case. Sam, interesting news here that we're seeing between this kind of tense relationship, I think, with Donald Trump and Jerome Powell. What have you got for us from over the weekend? And Sam, I'm sorry, I'm not hearing you in my ear. I trust that our audience can hear you.
Yeah.
Now I can hear you. There it is.
It'd actually be helpful if my mic was unmuted. That would actually allow me to speak to you. It's amazing how technology works. But now that we've sorted that out, you actually showed me what's going on here. Yeah, it looks like Donald Trump is trying to put to rest, at least for now, his ongoing contention with Fed Chair Jerome Powell. He told NBC News that, at least for right now, he is not going to fire him when he comes back to the White House, and we do have that clip.
Okay.
Let's see, do we have it right now? Oh, okay. Hold on. Well, he basically said that once he takes the White House, he has said he should have the authority to let Powell or tell Powell to leave, but he says he doesn't think he's going to do that right now. I think it's probably a wise move on his part, as he doesn't have he has plenty of political capital, but he doesn't want to waste that on something like that. He has much bigger fish to fry right now, considering the border, ongoing the issues of cutting the deep state, those types of things. Although in the past he has been quite critical of Powell. He said that he should have the right to remove him, and has said that Powell has made, quote, a lot of bad decisions in his opinion.
Yeah. Interesting stuff there, Sam. I would love to hear from the chat. I'll throw this question out to you if you're listening. Is Jerome Powell the best option, or is someone else the best option? So with Jerome Powell, you kind of get the knowns. I mean, there's a lot of things that he does that I think we're rightly critical of. It seems less problematic, perhaps, than, say, if you had someone who is just a complete woke monster in there at the Federal Reserve. But it's just interesting to think about. You almost have to wonder if maybe Trump's right here and just saying, you know what, let's let him finish out his term. He's going to be done in 2026, so it's not like it's going to be for much longer anyway. Maybe that's the best thing to do right now, Sam.
We do have that clip now.
We do. Okay. Yeah, please.
The chairman of the Federal Reserve, Jerome Powell, said he will not leave his post even if you ask him to. Will you try to replace Jerome Powell?
No, I don't think so. I don't see it. But I think if I told him to, he would. But if I asked him to, he probably wouldn't. But if I told him to, he would.
You don't have plans to do that right now?
No, I don't.
There you go.
Yeah, so Sam, it seems like, like you said, the tone is Trump's probably thinking, you know what, I do have some bigger fish to fry. And boy, he sure does. He absolutely does. I mean, he's got a government to clean up. He's got a military to rebuild. And perhaps most daunting, he has an illegal immigrant crisis that he has to clean up. And all that's going to take work, money. It's going to take some mental brain capacity. Probably just not worth it to try to get into a fight with Powell at this point. So.
No, there's only so many things you can do. And you got to remember, he's also struggling to get some of his cabinet members in, too. Yeah. He has a lot of scandals going on. I think a lot of them are created whole cloth out of the left, but still, that's something, especially when you have the media pumping them out as well, that you're going to have to put up some political capital to deal with. So I think dealing with the Federal Reserve's definitely at the bottom of the list of his priorities, at least for right now.
Yeah. No, I think so. That's good stuff, Sam. I appreciate you bringing that to our attention. We saw that news come out this morning. Also this morning, I mentioned earlier, when talking about the markets, NVIDIA shares are slipping. The reason why, the Chinese government is apparently opening a probe. So they were under pressure this morning after a Chinese regulator said it was investigating the chip maker over possible violations to the country's anti-monopoly law. So it's called the State Administration for Market Regulation. They opened an investigation into NVIDIA. The U.S., by the way, has blocked NVIDIA and other key semiconductors from selling their advanced AI chips to China in an effort to limit the country from strengthening its military. So this hits on an interesting point, folks. The question being, how free should the free market be, and how much should the government influence it? I personally am a fan of the freest free market you can have. I think also we're seeing here, it's no surprise that this is coming from communist China, so of course they're going to regulate it because that's just what China does. China's guilty of this far too much, I think, far too much oversight. I, of course, lean towards just letting capitalism do its thing, letting the free market do its thing, I think is a very good thing for us. Boy, I'm enjoying the Christmas music. I hope you all are as well, folks. We'll be having that playing throughout the month of December. A Merry Christmas to you all from us here at FISM. We'll be right back after this break. Stick with us. How is Timothy Plan continuing to lead the fight as you guys now enter your fourth decade of leading this fight of biblically responsible investing?
We've been too silent for too long, and we can no longer be silent. You stand up, like Ronald Reagan said, we're only one generation away from losing all of our liberty. It has to be fought for. I wish it didn't. And you can fight for it. You don't need guns and ammunition and that. You can fight for it, especially with your dollars, because it's always about the money. And when the money starts impacting people, they start paying attention. When we launched this, they said it couldn't be done, but here we are 30 years later. They said you couldn't get competitive returns, but here we are.
What a tremendous testament of God's grace.
Go to financialissues.org/Timothy Plans to learn more about Timothy Plan.
We believe in being faithful stewards of what God has entrusted to us, and nothing is more important than investing in the next generation. The most impactful way to do this is by sharing the message of Jesus with young people. Crossroads Kids Club is an after-school program that brings the gospel to elementary school children in public schools nationwide. Together, we can make a lasting difference for the kingdom. To learn more and join the movement, visit reachOurschools.com. Again, that's reachOurschools.com.
Through the ministry of Preborn, the Financial Issues family has saved tens of thousands of lives of babies. What an amazing job that God has done through you, the Financial Issues family. Would you join us in saving the lives of babies? What an amazing reunion we will have in glory, meeting all the people that we have saved. Please go to preborn.org, that is preborn.org, or financialissues.org, and click on the Preborn banner.
Welcome back, folks. Financial Issues. We're live this morning. I appreciate you all joining us here this morning on the chat. Of course, if you're listening on the radio, welcome from around the country. If you're watching on television and watching on social media, make sure to smash that subscribe button and share us with all your friends, and make sure to do all that stuff with us for sure. I hear we're monetized now on Rumble, which is pretty cool. So share us on Rumble there for sure. It's fun to see that. All right, folks, I got a couple clips I'd love to share with you. When we're talking about building a portfolio, just good to be reminded of these things here. We'll get to some more of your chat comments a little later on, some headlines as well. But I think this is really important for us to take a look at these here. Shana talks in this clip about the portfolio tracker and about some of the proper steps to take when building a portfolio. You may actually, folks, be finding this very helpful if you are now starting to redeploy some of your cash, because you might be in some of that, I don't know if I want to call it rebuilding stage, but it's many of the same ideas as you're trying to kind of re-put forth a lot of that money that's been sitting on the sidelines for you. So check out this first clip here from our founder, from our current host, Shana Burt, and then we'll hear from our founder, Dan Celia, later. Here's Shana Burt. What is the FISM portfolio tracker?
Well, the Portfolio Tracker is a tool that is available to all of our partners. If you're logged into the partner site, just go under the resource, I believe it's the resource tab, and go down to the Portfolio Tracker. And then what you'll see is kind of a blank template. And what you do is you put in all of your holdings that are in your portfolio. So, we encourage you to have an emergency savings account set up before you start investing. There's a difference between saving and investing. So your emergency fund is going to prevent you from having to dip into your portfolio for any kind of short-term emergency needs that you would have. So you want to include all of the assets in your portfolio on that Portfolio Tracker. You'll put in your shares of stock, the ticker symbol. It'll automatically pull up the current price for you. And then you'll have to match it to a particular sector that's in your asset allocation model. And once you get all of your assets input, you go to the output page, and it's going to show you the current plan that you've chosen, the asset allocation model that you've chosen in a darker color. And then it's going to show you where you are in the lighter color, or maybe it's vice versa. But one will be where you are versus where you should be. And it'll give you a really clean picture to look at to let you know where you need to maybe add more in your portfolio and where you need to take away some.
And, Shana, is that kind of the main purpose of the Portfolio Tracker, is to just kind of help us see how on target we are? Are there other purposes to it for our investors?
That's the main purpose. I mean, you can put in some cost basis information, and it'll kind of show you whether you're up or down. But I don't like to use that for performance tracking or to know where you are in a position, because if you have to sell a position, because it's going to give you a total at the bottom of if your portfolio is up or down, it's not going to really be accurate, because if you sell out of a position altogether, that return or negative return, whatever it might be, is not going to be counted towards your overall portfolio. So the main purpose of it is just for asset allocation. Yeah,
that's good. And this is a question we often get sometimes, Shana. The Portfolio Tracker is not your investment brokerage account, but how do we match these two things up and coordinate them so we can use it to the best of our ability?
Right. So we don't use it really for performance tracking or anything like that. But the way that you do it, you may get some good analytics on your brokerage platform about your account. It may give you a breakdown. It may show you, what percentage do you have in stocks versus fixed income and cash. But because our strategy is really specific and it focuses on asset allocation in terms of all of the different sectors that we break down. So if you're building your own portfolio, we recommend that you have a certain amount in energy, a certain amount in consumer staples, a certain amount in utilities, technology, healthcare, so on and so forth, fixed income. And so this is going to be really specific to our strategy. So using your brokerage statement, you use that to input the data into the tracker. But the tracker is really going to give you valuable insight as to how you build and manage your biblically responsible portfolio.
Awesome. Let's broaden the scope here now, Shana. We've been talking to our new listeners, our new partners, and now I want to include the veteran partners as well. Hopefully they were listening to all that as some good review, but this is a question for them too. So as we desire to be properly reflective of our brokerage accounts with the Portfolio Tracker, how often do you recommend our listeners check their tracker? How often do they make necessary adjustments? What are some tips and tricks you can give us there?
Yeah, so if you're using the stock strategy where you have individual positions, I would say you could make adjustments or review it quarterly, so 4 times a year. At a minimum, you want to look at it at least once or twice. But if you get into trying to do this on a weekly or a daily basis, it's going to take up a lot of time, and it's going to be counterproductive for you, because you really need to give your investments time to work. And if you rebalance more often than you should, you'll really hinder the return potential for your portfolio. Yeah.
I could imagine that could also lead to a temptation of worrying too much about the portfolio and kind of hyper-analyzing a little bit. Yeah. Yep. Last question for us, Shana. This is great. And this is as much as you're able to say on air here, because I know this is just for partners, of course, but any tips and tricks that you can give us for utilizing the tracker well?
Yeah, so you want to put, as I said before, put all of the assets that you're managing in your portfolio, not your emergency money, not your short-term money, not your money that you're using for other purposes, but put them into the tracker on the model that you want to use. Then before you look at the output page, make sure that the total at the bottom, where it adds up all of your positions, matches your brokerage statement, because sometimes you can miss key data or things like that. So you want to check the totals to make sure that they match up. The easiest way that I've found to do it is just to put things in alphabetical order, because that's typically how they show up in your brokerage account. Of course, you can sort them if you want. But then that gives you a way to kind of run down and compare on a line-by-line basis to make sure that you've got everything, because if you're missing something, then it can really skew your output. And then make sure that all of the sectors in the sector column are coded to something, because you can go to the output page, and if something's missing, it'll still give you the output, but it won't be accurate. So just make sure that everything's matched up there.
So good stuff there from Shana Bird. A great clip we have here as well from Dan Celia. He actually helped a caller with this several years ago on just how to build a good BRI portfolio. Here's our founder, Dan Celia, with some great information on this topic.
I have found a like-minded professional here to help me with my accounts, because I just don't have time, quite frankly. And he's actually partnered with you as well and set up my system. We're setting up my system on his system at Edward Jones, which is great. But so to make the long story shorter is I have finally consolidated all of my retirement accounts into cash, not to time the market, but just because they weren't biblically responsible. And now to start this process, I wanted to be biblically responsible from the day one. So I have basically everything is going to be in cash in the next 3 weeks. So it's not from a timing standpoint like you were talking about in your commentary, but it's really from a standpoint to get biblically responsible. That said, I think you've kind of answered most of my questions with your recent commentary today, but should I just start getting back in slowly, and like Shana said, maybe average in, maybe a little bit at a time, and just maybe do some of the more conservative stuff on your buy list to start with?
Yes, you should. Are you an income investor, do you think, then, Mickey? Are you going to be...
No, I'm going to be doing this business. I'm making good income now. I don't need to draw anything from it. So that was my next question. Which portfolio should I put it in, and which should I look at? Because I'm going to be 60 in October, but as long as my health is good and the Lord's willing, I can do this until I'm 70 or so at least.
Yeah, I would put it into the 55 to 65 retirement and leave it in there until you're maybe about 67 or 68, and then at that time you can start moving some more to income portfolio maybe. But yeah, no, I think it's a great time to start weaning in, and I would take a look at the starting sectors that I have on my list. That's where you want to start. And yes, so let's say you want to put, or your portfolio is calling for you to put, 8% in industrials. You don't want to put 8% in your industrials all at once. Put 3% in, maybe something like that. Put 3% in a couple of other sectors. And then maybe next month, as you come back around again, go to a few other sectors, and then the next month a couple other sectors, and then the next month maybe you're back to the beginning and you can buy a couple different positions. So I think that's how you should do it. Continue. Always remember that when you do that, there is a real possibility that you could be dollar cost averaging up. So if once you start coming around to adding more to existing positions, I've often said this over the last 2 years. For my personal IRA, I've been somewhat frustrated because I've been dollar cost averaging up, for several years now. I can't catch a break. But I really, really like the positions. I think they're good, solid companies. And of course, I believe they still have upside potential for the long term. So I keep adding to those. But it is like that often when you are in a 401k. There are young men that are and women that are in our 403B plan for financial issues. Well, they've probably been dollar cost averaging up every payday a little bit. Maybe they got a couple breaks. I'm sure there was a couple weeks where maybe what they were putting in was down, but all in all, it's been up. So don't get discouraged by that. It's okay. And that's going to happen. There will be statistically over 130 years, if you dollar cost average in on a payday or a monthly basis, your average share price is going to be lower. Maybe not every single month, but in the long run, it's going to end up being lower than it would had you try to time it or put it in at certain times. So I think that's exactly what you should do. I would start at the 55 model, and I think that's a good place to be.
So, folks, I hope that could give you a little bit of wisdom here as you're figuring out all of this stuff also. Boy, great to be here with you on the program. Folks, do want to remind you, if you are looking for a great Christmas gift to give one of your loved ones, you can always gift them an FISM partnership for $99 a year. It's a discounted Christmas price that we want to offer you. So make sure that you do that today, financialissues.org. If you have to leave us, we hope you have a wonderful rest of the day, and we'll see you tomorrow. The rest of you got a lot more financial issues coming up here. Good BRI exam with Sam coming up, and of course, more of your comments as well. We'll be back.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
One of the emphases of preborn has been ultrasound in two ways. An ultrasound machine if a pregnancy clinic doesn't have one, and then an ultrasound session, which we underwrite hundreds of thousands of those. We've seen over and over again the dramatic results that when a woman encounters her baby for the first time and hears that heartbeat, she realizes the magnitude of what's happening here, that there is somebody else. That's her baby. So this is why preborn pushes out ultrasound as much as we possibly can. Preborn has seen over 200,000 babies saved, over 59,000 people come to Christ, populating earth and eternity, life for this life and life forever. Save the baby's life, but save the mother's life so that she can lead that baby to Christ. If we're bringing people into this world and the mother doesn't receive Christ and the child is born and the child lives its life and doesn't receive Christ, this is not a good end. And so we have to have the gospel as part and parcel and really the heartbeat of what preborn is.
Every day, kids all across America are coming to school with some kind of hidden pain.
I've seen kids come in who are just so confused about what's right and what's wrong, just having no idea that God loves them. And this just breaks my heart. Crossroads has the opportunity to bring the Word of God right into the public school, to reach children right where they are.
And when we see that happen, we see God changing lives.
We want to see kids not only come to Christ, but pursue a lifelong relationship with Him. And so local churches are uniquely positioned to disciple those children as they become young adults and through their lifespan.
Crossroads comes alongside a church and provides that church with a club structure, curriculum, training, and ongoing coaching for them to run these outreaches in public schools.
If you are burdened for the children of America, consider making a donation to Crossroads Kids Club. For more information, visit reachOurschools.com. That's reachOurschools.com.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Merry Christmas to you all here from us at Financial Issues. We're grateful for you, our audience. Just appreciate you all so much. Thank you for joining us every day on the show and for your contribution to it. Of course, if you've ever given financially to the ministry in any way, whether you've been a partner or given a gift of a donation or a gift of stock or anything like that, boy, we just appreciate you so much. Can't do this without you. So we thank you so much for joining us today, folks. The markets have opened. What have they done? You're all wondering. Well, I'm about to tell you. A couple minutes in, the Dow Jones is positive, of course. The S&P down slightly. And the NASDAQ is down about 1/5% right now. Now it's a little bit less than 1/5. It's heading towards the flat line. So that's what we're looking like there. Oil is trending right around $68 a barrel. Meanwhile, the 10-year Treasury yield is right around 4.2% or so. It's been hanging around there for the last little bit for sure. But that's what we're looking like here, folks. Hey, we're going to get to the Ag Report in just a second, but I do want to mention Craig Haugaard, dear friend of ours, of course, the Financial Issues Ag Reporter. He has the final surgery of his sort of year-long procedure that's been going on for him this year. I know many of you have been praying for him. Please pray one more time for Craig. Tomorrow he'll be having surgery. It's kind of surgery week here at the ministry because Darlene's husband had surgery last week, and then Craig's having it tomorrow, and then my Josiah has it on Friday. So you can be praying for us here that the doctors who are working on all of the FISM family members who are going under would be able to do a great job. But especially for Craig tomorrow, this is kind of the final leg, hopefully the final step of what's really been, we've talked about, it's been an interesting year for Craig for sure. But he's just so positive and has a great outlook and attitude. So you can pray for him tomorrow. That's the final step of his surgery. Right now, here is Craig Haugaard with today's Ag Report. And then we've got some more headlines to get to. Here's Craig Haugaard.
This is Craig Haugaard with your Financial Issues Ag Update for December 9th. Corn futures were pulled higher on Friday by optimism that this week's USDA supply and demand report will show a general uptick in demand as a result of increased exports and larger ethanol crush numbers. That in turn would result in a lower carryout. As a result, March corn ended the day a nickel higher at $4.40 per bushel. Soybeans ended the day mixed as they were pulled back and forth by a higher soybean oil market and a lower soybean meal market. When the closing bell finally sounded, March beans were 1/4 cent higher at $9.99 1/4. Wheat closed the week with a whimper. Stories earlier in the week about the poor conditions of the Russian wheat crop were countered on Friday by a crop tour that stated the crop is indeed in weaker condition, but still retains the potential to produce 81.5 million metric tons. That actually would be a slightly larger crop than what was produced last year. Minneapolis March wheat ended the day 2 cents lower on that news at $5.96.5. Kansas City was a penny and a quarter higher, closing at $5.53 3/4, and Chicago was a penny lower at $5.57 1/4. Cotton futures were pressured by a stronger dollar and exports that are currently running 13% behind last year. March futures ended the day 99 points lower, settling at 70.11. Livestock futures were mixed. February live cattle were 15 cents lower at $186, 17.5 cents per hundredweight. January feeder cattle were 90 cents stronger, finishing out the day at $255, 82.5 cents per hundred. And February lean hog futures were 97.5 cents higher, closing at $87, 32.5 cents per hundredweight. Class 3 milk futures had a spectacular close of the week. In fact, January futures finished the day 40 cents higher at $19.45. Well, this has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
There's Craig Haugaard with the Ag Report today, folks. Always enjoy hearing from him. And again, please do pray for Craig. All right, our long-awaited, Sam, you ready for this? BRI exam with Sam coming up here. So apparently, there's been some interesting happenings with Fortune 500 companies engaging in some dark things. They could use Ephesians 5:8, our verse from the top of the show. Sam, what do we got going on here?
Yeah, I must say, Seth, it looks like the Fortune 100 companies certainly failed.
I'm sorry, I said 5:8. 500. I meant 100.
Yeah,
Thank you.
Yeah, that's okay. Maybe you failed the exam.
I did.
Too,
Yeah, that's right.
The Fortune 100 companies certainly did fail the exam. So during this whole segment, we like to focus on various things that companies are doing, or perhaps highlighting various issues that are going on in the culture as it relates to business and corporate America, to explain to you why it's so important to be involved in the BRI movement. So today I'd like to look at a new report by the Ethics and Public Policy Center showing that many of the Fortune 100 companies are increasingly prioritizing abortion as part of their family policy. So these companies, they love to promote that they're so progressive and forward-looking and so pro-woman. We have these wonderful pro-family policies. We're not going to tell you what they're about, but if you look a little bit deeper, you find out what we're really not talking about is family policy. We're actually talking about you not having a family, because it gets just a little bit too expensive if you actually end up having one. So as summarized by Live Action, while most do have parental leave policies, that would be these companies, nearly twice as many companies are willing to pay for abortions, but not childcare. According to that report, at least 42 Fortune 100 companies cover the costs for employees to travel out of state to obtain an abortion. And that report also says that that's likely an undercount. That's just based on the companies that publicly say they're willing to do this. If we had more information, we'd likely find out that many, many more of these companies are paying for people to go out of state for abortion. Now, on top of that, Seth, these companies are further incentivizing abortion by only offering partial assistance for adoption and maternity leave. As I said, they're fully covering abortion, but they're only partially covering these other things that would actually count towards a family policy, not an abortion policy. That's even among the companies with the most generous offerings for their family benefits. It should also be noted that most companies that publicly affirm coverage for abortion-related travel don't have public information about child care benefits, so they're kind of trying to hide the ball here about what they're really trying to do. And according to that report, companies would prefer to pay only once for abortion than to pay in a number of other ways if a female employee chooses to give birth to her child. The companies, by the way, also risk losing that employee if they end up having their kid and they're like, maybe it's more fulfilling to actually be a mother than just work for the rest of my life making some random widget. And these companies say, best if that doesn't happen. It's way too costly for us. Here's an abortion.
Sam, thanks for bringing that to our attention, man. One of the things that I noticed with this, Sam, as you were talking, I feel like we always talk on the show about, in fact, I talked about it with Jenna Ellis at our interview that we did on Friday, the importance of language. Language matters, folks, okay? Calling something what it is really important, especially when you're trying to live in a world of common sense, or should I say, living in a world where common sense is increasingly uncommon, but you are trying to exhibit common sense for the glory of God. You have to know what you're talking about. These companies are claiming that this is family policy, so they're claiming to be pro-family. Just like Sam said, what they're actually doing in claiming to be pro-family is actually preventing families from happening, literally allowing their employees to kill children and calling this family care. It's really sad, but at the same time, I don't want you to just be frustrated by this. I want your sensors to be up to know what's really happening here, what they're really talking about. Sam, I took a quick look at that. And by the way, folks, I did just put this report in the chat. It's really good for you to read through this and to kind of see. So they examine a lot of the big name companies and essentially give them a score, Sam. Am I right? A score on if they provide surrogacy support, if they provide adoption cost, if they provide abortion travel and IVF, if they provide parental leave and what parental leave they provide. Some of the, shall we say, Sam, usual suspects, I think, are on this list, so don't be surprised to see that. You might see some companies that are biblically responsible also that are on this list, and maybe what it will say is, so for example, abortion travel might say unknown, or it will say no, and that's a good sign. That means the company either doesn't provide abortion travel or it's unknown, and that could be a good chance that maybe they don't. They just haven't, they haven't talked about it because they don't do it. Not saying that could be a good thing, because it could also be unknown that they're hiding this. But nonetheless, I think it's good to really look through this and, kind of see what's going on here, for sure.
I'm actually very impressed with the report as a whole, because as someone who does some of our BRI research behind the scene, this is something that, in my experience, has been somewhat difficult to suss out for different companies, because they do unless they're completely woke and they're like, yeah, we're pro-abortion all the time, they do sometimes like to hide the ball about what their medical policies are in regard to this, and not all of them are just forthright in saying, yeah, here you can look at our different documents. So it can be a little bit more difficult to do. So I am very impressed with the report, and I would encourage all of you to read it.
Same here. So hopefully you'll check that out there in the chat, folks. I put that link there in the chat. I'll try to get it over on Facebook too, probably at the end of this segment, because it's hard to copy and paste while you're trying to talk. But that's what's happening here. You know, folks, bottom line, here's the deal. Bottom line is that a culture of death puts family and children not in first place, but it puts them on the guillotine, so to speak. Children are the ones who end up getting sacrificed, quite literally, at the altar of demon gods, which is what happens when abortion happens. There's a spiritual thing happening here, folks. And for thousands of years, mankind has been killing children to satisfy demonic powers. And Planned Parenthood and the rest are no different. And so we need to be understanding of what this is here, and we need to be funding the light with our resources, defunding the darkness with our money as well. That's why we give you ministries like Preborn to support. Great opportunity at the end of this year to support Preborn, of course. Go to preborn.com and do that. More financial issues coming up here right after this break. I know I promised we'd get to a lot of those chat comments. I'd like to do that because there's some good ones in there. So we'll get to you all. Grateful to be here with you this the second Monday of the Advent season here. We'll be right back after this break.
If the ministry of financial issues has impacted your life, you know that the effects of a partnership can be life-changing. When we put God first in our portfolio, we receive peace, knowing that God will be glorified. Take advantage of our exclusive 25% off holiday discount and give the gift of peace this Christmas. Visit financialissues.org and click on Gift a Partnership to start making an impact this holiday season.
I found out I was pregnant when I was 21 years old. For me, I was scared, I was shaking. They do an ultrasound, and that's when everything changed. When I saw my baby and when I heard her heartbeat, that was it. We've seen the hand of God ever since we stepped into the pregnancy center.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That He loves all of us. He died on the cross to pay for our sins. That He will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on Him no matter what happens.
To learn more about Crossroads Kids Club and how you can get involved, visit reachOurSchools.com.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Hey, welcome back, folks. I hope you will check out the report that Sam and I just talked about in that last segment. I dropped it in the chat on the website and also on Facebook there as well. I am not able right now to get to YouTube and Rumble. So, guys, I don't know if any of our team listening to the show can perhaps get those, perhaps Giuliano or Elijah can get that link in the chat there and put those on YouTube and Rumble for us.
What Seth's telling you is he's actually lazy.
That's right.
Can't do it.
That's right. No, truth truthfully, what I'm telling you is I'm social media inept. So that's what and I'm not very good at multitasking.
It's not
either
laziness, it's incompetence.
That's right, exactly. I'm not sure which of those is better, but anyway, so that's what we're looking like here. A lot of great comments here. I saw a couple really good ones. People love Pat, and you know what? You should love Pat. Pat is awesome. Pat is our partner relations expert here at the ministry, and she does such a great job of caring for our partners. So if you have, any questions about the website or the ministry or anything like that, Pat at financialissues.org is the place to go for that. She can help you, figure out if you have issues with the portfolio tracker, for example. She's been very helpful with that. And Pat, just a faithful servant. I think, correct me if I'm wrong, if anybody knows this, I think Pat is after Dan, the second longest tenured ministry member here. She's been here for,
pretty sure
decades.
You're right about that.
And
She's
so
at least been here longer than I have.
Absolutely. A dear friend.
It's more than just partners, Seth, that she helps out all the time. I'm like, what do I do? It's like, well, Pat probably has the answer to that.
Yeah. So Pat at financialissues.org. We love Pat so much, and so grateful for all of you being able to enjoy the help that she's able to give you as well. It's really good stuff. We had a question here, Mitch in Virginia, saying, didn't Dan used to have a particular gain at which you'd sell a particular stock, a percentage gain? And Mitch actually saw another great comment in there. Nelson was talking about profit taking, not standard procedure. Nelson, you're exactly right. Mitch, we simply have it's a long-term strategy, so we're not looking to say like, okay, once you hit 20%, then you sell. It's not the way it works. We're trying to go long term. You might see some massive gains in some of your positions where you're up even into the hundreds or couple hundreds, and some other positions might be down, and it might we might issue an alert, for example, saying, hey, that position you're down in is no longer biblically responsible, so you have to sell it at a loss. But that's our strategy is much more focused on, number one, being biblically responsible, and number two, being long term and well diversified. And if you do that, we really believe that you'll do a great job overall. Remember, you don't want to become beholden to one specific stock. You want to be looking much more at how your portfolio is doing as a whole, and that time horizon as well. If you're in it for 2 or 3 years and you're thinking, man, I'm not seeing the gains that I would like, well, you've only been in it for 2 or 3 years. Check back in 5 or 6 years more, and you're at that 9 to 10 year mark, and then you're thinking, okay, I've been at this a while. Dan used to talk all the time about how he had some stocks who were doing just amazing, and the only reason they were doing great is because they were old. There wasn't anything special about them. He had them forever. He held them for decades. So that's really kind of the mark that we're looking for there. But a good question there, and great to see, again, so many of you all in the chat this morning. I appreciate you all. Also on Facebook, Leith, Brian on both. I know Brian's watching on both, and we've got Philip, of course, there, Richard as well. So great to see you all here. All right, Sam, we got a couple more headlines to get to. Before we do, Sam, actually, let me just say this real quickly, that non-farm payrolls, we got those numbers out Friday. They rose by 227,000 in November after an upwardly revised 36,000 in October. Unemployment rate rose 4.2% in November. That matched expectations. This week, not a lot of big news this week. We get some inflation numbers, nothing really today. The NFIB Optimism Index is tomorrow. The inflation rate is Wednesday. Initial jobless claims and PPI is Thursday, and not a whole lot on Friday. And of course, we're waiting for the earnings season for Q4. That's not going to come until mid-January or so. So we're in kind of that lull period. Really, you can think about it, 6 months of the year we're in earnings season, and 6 months we're not. And so it's not sequential, obviously. It goes from earnings season to not to earnings season to not. We're in that not period right now. The next one will be Q4, and that's going to come in the new year, about 2 or 3 weeks in. All right, Sam, let's get to some headlines concerning cryptocurrency here. I know we got a chat question in there from Claude about cryptocurrency, but Sam, what were we seeing there? Obviously, Bitcoin had a pretty rockin' last week or so. And by the way, folks, this is not a recommendation or anything. We're just keeping you up to date on what's going on here.
And that's part of the reason why we want to talk about it.
That's exactly right.
We know that you're seeing this skyrocket absolutely to the moon, and you're thinking, maybe I want to get involved in that. We'll talk about that in a second, but let me let you know what's going on. So as you've probably heard by now, Bitcoin topped $100,000 for the first time on Wednesday. It's actually risen 47% over the past month. So ever since Donald Trump was reelected, Bitcoin has been super excited. And it's up over 100% in less than a year. I believe it's dropped back down past past the $100,000 mark, so it's in the 90,000 range, somewhere in the upper 90,000 range at the moment. But still, this is incredible sign. Who would have thought a couple of years ago that Bitcoin would have ever seen numbers like that? So it is pretty exciting. But again, that's not a complete endorsement, but it is showing you where things are going at the moment. This also comes as Donald Trump has been appointing several pro-crypto people into his cabinet. He announced Howard Lutnick, CEO of Cantor Fitzgerald, as his commerce secretary. He also appointed former PayPal chief operating officer David Sachs as his AI and crypto czar. Now, Seth, I wanted to ask you about this guy because at least the direction he's taking crypto, because he seems like he's going to address at least some of the concerns that Shana and Dan have had with crypto in the past. That it remains to be seen if that's actually going to happen. But according to Trump, he wants to deal with some regulatory legal frameworks for these things, because I know we played a clip, I think it was last week, of Dan and Shana talking about that, saying like it's so unregulated, you just don't know what you're getting into, and it opens up a whole can of worms. So maybe there is some positive changes for crypto coming down the pike with some of these appointments. Yeah, it's interesting there, Sam. I do think that's a good sign. I think at the same time, it's really one of those things where now we just have to wait and see if it's going to happen. So I would say, it's good to keep the same kind of mindset that we've had about crypto. I mean, there's nothing, you can think about this, there's nothing particularly non-biblically responsible about it. Cryptocurrency, just like regular cash or gold or any other type of, currency, can be used for good or evil. But I think it is important to say up until this point, it's been very non-regulated. And also something to consider as well, especially with Bitcoin having hit over $100,000 for the first time, it's trading at these all-time highs. So you have to wonder, is now really a good time to get into something that's that high? And with something that's as chaotic as this, you have to wonder, is it going to come down again pretty heavily? So Sam, I don't know if that answers that question there, but I do think the position that we've had as a ministry, I think, is a really good, just a really good place to take when you're considering this, especially as everybody's talking about Bitcoin and other cryptocurrencies, and it's going to be kind of on the conscience for sure. But just, I'd say, stay up to date on kind of what our team is kind of looking at here and some of the trends that we're seeing here as well. But definitely good to, I think, still keep some level of caution here. Although, Sam, I think you're right. It's good to see, Trump wants to address some of that, some of those problems that we've been seeing in the cryptocurrency, particularly with, some of those regulatory problems. Absolutely. So I think it's one of those things where we just want to see, we kind of want to see what happens here. There are many other great opportunities to invest in on our buy list. And again, just like we mentioned to Mitch earlier, if you take that long-term approach, that good, solid long-term strategy that's well diversified, I think you'll do great. Because that's a proven strategy for success. It's not a guarantee of success, but it has proven to do very well for a lot of people. Yeah, it's a very speculative endeavor. You're kind of placing a bet in some way, whether you think it's going to continue to rise or if it's going to drop. And right now, with it being worth roughly $100,000, that's a pretty risky bet. So there's certainly some caution that you might want to have there. I think Trump's gonna have to run the gamut with this, though, because there's kind of a catch-22 here. Is like, one, you want it to be regulated so more people can invest in it, but if you regulate it too much, that kind of defeats the whole allure of Bitcoin in the first place, that it is kind of this wild west of commerce. So we'll have to see what he's going to do about that, because he has to thread that needle very carefully.
He does. Absolutely. So, yeah, you're exactly right, Sam. We'll kind of have to see what it looks like there. And that's why, man, we would encourage you all so much. Now's a great time to become a partner. If you become a partner, of course, you get access to the partner conference calls where we kind of dive into a little bit more of this deep dive stuff. We can only talk about so much on the air here, not just with our expertise, but also with the time that we have left. There's less than 2 minutes left in the show, so there's not much time to get into it more. But if you become a partner, you get those conference calls. You also get the partner commentary, which is really good stuff. And I do have a suspicion that we'll at least be talking more about this on some upcoming commentaries, because let's face it, it does seem to be sort of trending in that direction that, cryptocurrencies are becoming more and more part of the national conscious, as it were. So I think that's always good to kind of keep in mind there, folks. The markets, real quickly, before we sign off here, everything is trending right near the flat line still. The Dow Jones has dropped to the flat line. The NASDAQ has come up almost to the flat flatline. The S&P 500 is still down about 0.1% there or so. So that's what we're looking like here for the markets. We got a good week of financial issues coming up here, folks. I do appreciate all your prayers for us here at the ministry, personally, especially for my son Josiah. Thank you all so much. Please keep him in prayer. He'll be going into his surgery on Friday, so you can pray for him as well as me, Megan, and Eloise. That we'd be good supports for him, definitely. But before that, make sure to pray for Craig and his surgery tomorrow. We'll have a tremendous week coming up here, of course. Shana will be joining us, God willing, later in the week, live as always. But until then, folks, remember, everything you have belongs to the Lord. As we're thinking about all these different things here, remember to be a good steward of the light, to walk in the light, as our verse talked about earlier in the show. And remember that everything you have belongs to the Lord. So be a good and faithful steward with it. God bless you all. Lord willing, we'll see you next time for more financial issues. Have a great day.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.